3 years ago, I got into Harvard Business School, decided that I wanted to go there, and met my co-founder in a WhatsApp group that the school set up for incoming students. So it's about 800 overeager students talking to each other about every possible topic that they want to optimize before they get to campus. And the topic of student loans came up. A few of our classmates were comparing their options. They wanted to see if the rates they were getting were different from one lender to the next. And when we noticed that there were very wide gaps, Nikhil reached out to everybody and asked if anybody wanted to help him with an experiment. And that experiment was to see if we could join together a large group of students and negotiate a bulk discount on loans. And so that's exactly what we did. About 3 months before we set foot on campus, we pulled together a Facebook group that we started inviting MBA students to, and a very simple Google form asking people how much they wanted to borrow and some more characteristics about themselves. And while we were both working our full-time jobs during the day, we were working on a pitch deck to send to a bunch of different banks and credit unions at night. And we ended up pulling together on day one about 70 people. We were super excited. There was about $5 million worth of demand. We reached out to a bunch of different banks, and almost all of them either didn't reply or rejected us until finally we started sending cold LinkedIn messages to the CEOs of different banks, thinking, okay, this is our last shot. Let's just try it. If it fails, it doesn't matter. And then the CEO of a company called SoFi at that time responded to us and said, this is interesting. 70 people is a little bit too small. Can you get to 550? And we took that as a challenge. We reached out to people at 7 other business schools. We got to about 700 people in the next 2 weeks. And as soon as that happened, a lot of the same lenders who had said no the first time we reached out changed their expectations and said yes this time to participating in a process. And we ended up getting every single person in that group substantially lower student loan rates than what was available before we started doing this, all before we ever met in person and turned this into a formal company. A lot of what we were trying to do was communicate to different lenders who hadn't done student loans before why this group of students is particularly attractive. And so we were able to gather lots of great data on the outcomes that MBA students have from the programs that we were serving, and more information about each person within the group themselves that was able to really shorten the timeline it took for a bank to say, yes, we're going to start lending to this group of people. The reason why that's complicated is normally to convince a bank to start lending to a new group of people, you need a lot of historical data. It'll take many months to even get to a maybe. The only reason we were able to get from concept to a yes and having a partner who funded loans in a few weeks is because, frankly, a lot of people want MBA students as customers. You tend to be extremely good customers long-term for these institutions. And so there's an ability to group together and make sure that they give a group of these attractive customers even better economics than they would to an individual. This did initially start because Nikhil and I needed to get student loans, and we're honestly trying to find the cheapest way that we could do it. The first summer that we did that, we weren't generating any revenue from it. It was an experiment for ourselves and our classmates. And then when we met in person is when we decided to turn this into a company and see if we could actually make the economics work. Thankfully, I believe that we can, and we have been for the last 2 years. But to answer that question a slightly different way, figuring out how to pay for your MBA or how much you should pay for an MBA can be quite daunting. There's a lot of work that goes into the actual application itself. And a lot of people don't worry about what the cost is going to look like until after they've gotten in somewhere, which is completely fine and totally rational. there's a few tips that I just have in general for ways to just reduce the burden of what paying for school is going to be. First is, and we've learned this frankly from a lot of our Juno members who've tried this, there is an ability to negotiate the amount that you're going to pay the school. So after you get in and you get a financial aid award letter from the program, I kind of view that as a first draft and not a final draft. And there's many instances where schools are reserving part of their financial aid budget in order to win someone who might be admitted to more than one school. And it's not going to hurt you to simply ask for more help or to ask for a little bit more money. Once you've gotten in, they're not going to rescind your acceptance. And so our first piece of advice, and one that I wish I knew a little bit more 3 years ago, is that if you're not going to ask for a little bit more, somebody else is, and they're going to get it, so just do it. And after that, once you get to the final amount that you actually have to pay for the school, that's when the decision becomes, if you have assets or cash, do you sell those to pay for it, or do you take out a loan? And that's where Juno really comes in. And that's where we spent the last 3 years trying to simplify the process so that people can come to us and say, hey, I might need a loan for the fall. And the simplest way to describe what we'll do is we'll come back to them before they need money for their tuition due date with a offer that we can virtually guarantee is the lowest set of rates available to them. There's a lot that we've taken from programs that were set up in Harvard Business School for entrepreneurship specifically, things that have helped us tremendously on our day-to-day operations and even fundraising. So let's take the classroom environment. I'd say much more important than the actual content being taught in the MBA is the help of specific professors who can open just a tremendous amount of doors for you when you're trying to start a company. And so our network of professors who we've remained quite close to has helped us with everything from figuring out how to interview salespeople, who to reach out to, figuring out which venture firms to reach out to in what order and how to structure a fundraise. We've had professors who helped introduce us to lenders who provided large portions of loans to our member base because they happened to be on the board of the bank or know somebody who ran it. And so I'll be honest, I think the MBA experience talking to those professors and asking them for help has just materially shortened the amount of time it would have taken us to try to achieve the same goals. And we'd probably be at least a year behind where we currently are had we not done it. The second thing I'll just add to that is there are a lot of structured programs, a lot of MBA programs now to help people start companies. I'd say at HBS in particular, it's really helpful. If you don't know if you're going to have any funding for your startup, HBS actually gives you some money over the summer to work on your own thing. And we'll actually give it to two people working on the same idea together. There is lots of structured mentorship that is much more than just mentorship. It's not just meeting with somebody and checking the box. These are people who are devoting time, who started companies and sold them, and well-respected venture capitalists who show up every day and are there for people asking questions and asking for help. And so what I kind of would encapsulate that as is you get into this, out of it, what you put into it, but there are a tremendous amount of opportunities to seek help and accelerate any idea that you want to work on. That's why I really like to press people on making sure that if they're in a position where they feel like they're going to need to take out loans and they're committed to go into business school, that they push much harder on trying to reduce the sticker costs that the school is going to make them pay. Because at the end of the day, I think like the most, what you mentioned is completely true. It's something that impacts a lot of my friends today and myself a little bit. if you do have a large debt payment you have to make after you graduate, it does change some of the choices that you might have otherwise made. It does constrain some of the optionality that you might have gone to school to gain. And I would argue very strongly to try to avoid taking loans. This might be counter-selling to what we do, but in any circumstance where it's possible, I'd say, of course, please try that. Beyond that, though, if you're in any position where you might need financial assistance, where we've seen part of the problems come up with the student loan industry is, frankly, the vast majority of the industry is organized in a way to make it difficult for people to determine exactly how much they're going to have to pay. And because it's a daunting decision, a lot of people sometimes have their head in the sand and want to put it off as long as they can and kind of want to pretend that it's not there. And unless you confront it head on, then you're not going to make the best decision for yourself. I really want people who identify through any means that they do need a student loan to do more comparison shopping on this than on any other purchase they've previously made, because in all likelihood, it is, in a way, the most expensive purchase that you've made to date. And I've been kind of surprised by the number of people I know who might have spent more time comparing the laptop model of what they were buying to go to business school than the financing options for the entirety of that program. I hope that's helpful. I just say spend a lot of time thinking about this decision and doing the math and asking other people for help. The name of the company is actually new. When we started this 3 years ago, it was Lever Edge. So kind of like leverage is in debt and then an edge on the end. It was a clever pun that a lot of MBA students liked. And as we grew the business outside of MBA, that pun did not sit well with most people. And everybody searching it on Google would misspell it. So if you've changed to Juno, it means nothing. It's just easy to say and easy to remember. And what we stand for at the end of the day is making sure that we can help our members access the best financial products at the best price. We've started with student loans. We now do student loan refinancing, and we're trying new products. Our core thesis is take different industries in financial services where there isn't much clarity on what pricing looks like for a customer. Try to simplify that. Gather together large groups of customers and get the providers of those services to compete for that product, for that customer group. So we're really just replicating this group buying experience for financial products with the end goal in each product of being, let's have the best product and let's get it at the lowest price and keep repeating that. Typically after you've been admitted, you might hear about Juno from someone in your class or through different forms of advertising with different partners. And when you come to our site, what we'll ask you is when you think you might need a loan. So let's say you got in round one this past year. You would have come to us around December. You would have told us that you need a loan for fall of 2021. And on our side, it's as simple as signing up for a mailing list with no obligation. So you as a student would tell us some really basic information, like where you're going to school, what year you're graduating, and then we make it optional for you to answer questions about your self-reported credit score, your self-reported income, and how much you'd like to borrow. And the only reason we collect that data is because we spend almost all of our time talking to these different lenders and trying to pitch them on the group that we put together to get them excited to compete for our aggregate business. We don't share anybody's personal information. We just roll up aggregate metrics and say, look, roughly 30% of this pool comes from these schools. This is the overall correct credit quality of the pool, and this is how much people want to borrow. What's the best you can do for them? So while we're doing that, we get multiple of these lenders to agree to participate in a formal RFP process. So we have a program through which they send us information on the rates and terms that they would charge to members of our group. At the end of that, we negotiate further with a few of the most compelling offers that we've received. And then we spend about a month or two implementing that on our side with the partner. And on June 1st, we make whatever that deal is accessible to all of our members. So if you need a loan for the fall, typically at some point in July or August, your MBA program will say, hey, this is now the time to apply for the loan. We need you to do it in the next 30 to 60 days. At that point, you'll already have an inbox with a link that you can click from Juno. And what that link does is it'll take you to a special portal with our partner lender. And the rates and terms that you get through that link are lower than if you went directly to that partner lender or to anybody else. Not at all. So there's people who are signing up right now who are intended MBA class of 2026. There's people who book time to speak with different people on our team for advice about the application process, even before it gets to the financial aid portion of it. And we're more than happy to help because we were in those same shoes very, very recently. And so no application is required, no acceptance is required. We'll do our best to provide the best advice that we can on any topic related to this experience. The limit on the minimum loan amount is typically $5,000, varies by lender, somewhere as low as $1,000. The question we get more often is unfortunately about the maximum, and that is defined as the cost of attendance as defined by the school. So cost of attendance means your tuition plus mandatory fees plus some allowance for room and board the school calculates for the average student. And that sets a cap on how much you are allowed to borrow. When we're talking to financial institutions about how we structure this, our goal is to set it up so that we're not setting a cap on how many people we can send them, so that we do have a large amount of funding capacity. And this upcoming summer, it's this very similar situation. We don't want anybody to be in a situation where they are relying on us to guide them in a certain direction and then are unable to serve them at the most pressing point of the summer. Currently, we help U.S. students studying in U.S. schools, and as of June 1st, U.S. students attending 105 institutions abroad. So if you go to IESC, LBS, INSEAD, or 100 other institutions, for the first time, we'll be able to provide funding to those U.S. students going abroad. And then with respect to international students, we've been working really hard for the last year and a half to try to find new funding sources who can provide more competitive rates to international students coming to the U.S. specifically. That's frankly been extremely challenging. I'll say what we've been able to do is set up the infrastructure to originate and service those loans. And we're working very hard every day to find different funding sources who can provide the capital to lend to international students, especially because we know that it's getting more and more challenging for those students to access credit right now. We have something that we just launched yesterday. It's an arrangement with a partner named Nomad Credit that does provide some exclusive benefits to Juno members who are international students studying in US programs. Hopefully that's a start in the right direction, and we'll see where we go from there. First thing to do is make sure that whatever you apply for, you don't accept on day one, that you at least compare it to other options. We're actually going to release a tool next week that we had a version of last year. It lets people see what other people claim to receive as rates and offers. So you can see more transparently what you might be able to qualify for. And I'd say that is the first, second, and third most important thing, is to compare this. The only thing I would add after that is there is less pressure to make a quick decision if you're a US student studying in a US school than any email that you might get. You can apply somewhere and you might start getting emails that say, you have to sign now or this expires. Don't succumb to any pressure. This is a huge decision. You can take time to make that decision. And if you need any advice in making that decision or trying to determine what the best offer you have between multiple different offers are, then by all means, please reach out to our team. We have many calculators that you can use, different tools you can use, and different people you can talk to who are graduating from your same program last year, the year before. And so compare things and ask for help, and it will work out fine.